Let's look at the results of giving an algorithm $10,000 to trade. And so far, it's done over 600 trades. So let's go ahead and see the data. Welcome. If you're new to the channel, my name is Matt Jimenez. I'm an entrepreneur who has worked with the greatest minds in finance over the last several years, and I'm here to pour into you guys everything they pour into me. And in this video, I'm going to be going over data of the Dalio bot, which is a software that Nurp offers. And I like this software because it's a bit different than the rest. It has a hedging mechanism, so it's taking both long positions and short positions, which adds a very unique dynamic to the trading strategy. But also, more importantly, the one that I'm using, I've put a 15% stop loss to protect my equity and make sure if I take a loss, it's never anything greater than 15%. Now, I started this software back in June and it didn't start trading until July 22nd, so it really hasn't even been a full 3 months. And so far, my FX book has tracked 687 trades. Now, enough of the boring rambling, let's get straight to the data. Here we are on my FX book. This is the Dalio bot I'm using. And so far you can see that the account has done 17%. But the odd thing is when I go ahead and check my phone and I look at my MT5 account, it's actually showing me a grand total of 19%. So this MyFX book is lagging a bit behind because technically I'm up 19%, not 17% in the time span that it's showing. This red line represents the actual capital inside the account and its growth. The yellow line is anything that's unrealized. This is the equity curve. So if I'm in a drawdown, which is an unrealized loss, it'll show all the pullbacks. These pullbacks are actual drawdowns. As you can see, this drawdown was 5%, and then this unrealized profit right here was 1.9%. So this is not something that is fully reflected in the account until the trades are closed out, which then will represent in the red line. As you can see, it's been kind of up and to the right. I'm quite happy with this equity curve. It's been smooth, steady growth. Of course, it's had its pullbacks, but I've yet to experience a losing month. In fact, let's scroll down and look at the months. So like I said, it started in July 22nd and it only had a few days of trading, which it did 0.63%. Then in August, it had its full first month and it yielded 8% in my trading account. Then September, we did 5.17%. In October, it did 2.4%. And today is October 9th. So we still have quite a bit of time left on this month, hoping that I can close this out at another 5%. This is bringing my monthly average to 4%. But what you need to understand is, since I had the software in June, but it wasn't trading, it documented that data as 0. So that's bringing my average down. And also, starting it late in July, turning on the software to actually take trades also affected the overall average because now it only traded a few days left of July, which obviously cannot do a large amount of trades in that short time period. So, of course, that small window that it traded only yielded 0.6%, which also brings my average down. I actually believe that my monthly average would be a little bit higher than 4%, but doesn't matter what I say, it matters what the data is showing. As you can see, the account was started with $9,954, and right now we're sitting at $11,647. If I scroll down, this week so far, we've done 0.22%, and today is only the 9th, like I said, so it's Wednesday. I still have half of the week to go. So far this month, we're up 2.4%, and then this year, again, 17%. Now, to the point I was making before, it's already taken 687 trades, but on my FX book, it's actually reflecting a little bit higher than that. So I'm probably in the low 700 trade count right now, which is the reason why I'm at 19% growth in my MT5 terminal. If I scroll down, this is the profitability. So I'm winning 71% of the trades, which means I'm only losing 29%. Out of the 687 trades I've taken, we have won 485 of them. The profit factor, this is a very attractive metric to look at because this means for every dollar it's risking, it's gaining 2 times that. Now the average win is about 35 pips and the average loss is 59 pips. But since we are winning a lot more than we're losing, obviously it's working out in our favor. Right now I'm in a pretty large sequence of trades on GBP USD and NZD USD. I just pulled up Forex Factory and we had some crude oil inventory come out and we hit well above what the forecasted was. And when we're well above it, that is actually weak for the US dollar, in which we've actually doubled the forecasted, which was 2 million, and we came in at 5.8 million, which is causing a lot of US dollar volatility. And then also we have the FOMC meeting coming up, which is very hard to predict because you don't know what they're going to say. You just need to pay attention if they're being dovish or hawkish, which obviously indicates fiscal and monetary policies coming into the economy soon. So they talk about tightening or quantitative easing, anything of that matter, then we can expect even further volatility in the US dollar. But the real scary part is tomorrow, which is Thursday, we have a lot of US news coming out. And in fact, depending on how this goes, actually might indicate if I experience some type of loss in the account for the first time. Because again, like I said, I'm in a very large sequence and I'm very transparent in showing and speaking about everything that's happened inside of the accounts that I have funded. So tomorrow we have a lot of CPI metrics coming out and unemployment. These are by far some of the most volatile news releases to happen for a currency. Typically with the CPI numbers, they're trying to measure inflation, and if they hit the target, then it'll be strong for the currency. And the target here is in the forecast bracket. So we're looking for a 0.2% on the core CPI, and then the other metrics, we're looking for a 0.1%, followed by a 2.3%. So if we come in off of those numbers, we can expect loads of volatility. If we come in on the numbers, then you can expect some strength because they forecasted exactly what it is they were trying to get to. The next thing is unemployment claims. This is how many people are saying we don't have a job and we want to get paid. So this is important because if we come in with the 231,000 claims, which is our forecasted, then we will experience US strength. But if we come in higher than that, then you can expect some US weakness because now we have more claims of people being unemployed, which is clearly not good for an economy. Now, I want to show you guys exactly how the software looks. And down below, as you can see, this is my balance, this is my equity, this is my margin. One thing that I actively do is make sure that my margin levels are healthy, because if they're not, then I'm going to turn off algo trading, so that way the algo is not going to go into a further sequence, taking on more positions, eating up more of that margin. All these green dotted lines is all new positions being sized in to offset the ones that were taken earlier that did not turn a profit yet. Again, all of this is unrealized. None of these trades have closed. So right now I'm sitting at a drawdown of about 7%, but nothing's closed out. So again, drawdowns are unrealized. It's not reflected in my account balance yet. Hopefully this thing will have a bit of a recovery and it'll start closing out some of these. As you can see, this red dotted line is the TP, so we're not asking for much for this whole trade to be offsetted. And typically what I do during these times is, again, pay attention to margin and make sure that the account is trading healthy and optimal. Another chart I wanted to show you guys is GBP USD, because the reason I'm showing you this one and GBP USD is because I want to show you what it looks like when the software is sizing into a position to offset a lot of the other positions, and this is quite interesting. So now here we are on GBP USD, and GBP USD again is very similar to NZD USD, but it's not scaled in as heavy, fortunately. This one, the take profit's right up above here, and we've sized into 5 new positions quite recently. And we've reached about a bottom over here where you can see support. All these arrows here that you see along the chart are all past positions. Here we sold and then we closed, we sold, we closed, and then now we're in a buy sequence. We bought here, 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 here. We sold here. That's the hedging mechanism. So while I'm in buys, it's also finding sell positions. This is one of the unique features with the Dalio. Here we sold, we closed out here, and then we also added a buy down here, a buy down here, and then simultaneously, again, we shorted. We sold here, closed out, sold here, closed out. So that is why I like the Dalio so much, because it has that mechanism of hedging. And so far, I've enjoyed my experience with the Dalio. I am curious to see what's going to happen over the next few days here with all this new US news coming out and all this volatility, especially with me being so sized in to NZD USD. I think it's going to be quite interesting, but regardless, I will always show you guys the journey and always be transparent. It's one of my core values. So stay tuned for another update on this exact software to see what actually conspired from the point of making this video to when everything closed out. If you're interested in a software like this, just hit the link down below and you could see more about it. Or if you just want to speak directly to the team, go to the pinned comments and you'll get access to speak directly to one of us. And if not, and you just found this entertaining and interesting, please leave me a like, comment, and or subscribe. It means the world to me. And like always, my friends, peace.